Dear students, welcome to my class. Today I will discuss about a mathematical problem relating with cost volume profit relationships. Basically in this chapter we will see if cost or activity changes, what will be the impact of profit. Now today I will discuss about problem number 6-10 from Managerial Accounting book of Garrison. Here our question is, Menlo Company manufactures and sells a single product. The company sales and expenses for last quarter follows. So here the amount of total sales is given 4,50,000 and variable expense is 1,80,000. So if we deduct the total amount of variable expense from sales, then we will get the amount of contribution margin, and after deducting total fixed expense from that contribution margin, then we will get the amount of net operating income. Now come to the point where our requirements are given. Our first requirement is, what is the quarterly break-even point in units sold and in sales dollars? Before discussing first requirement, first we have to know what is break-even point. Basically, break-even point is the point where there is no profit or no loss. It means by selling how many units, the company will be in that position where there will be no profit or no loss for the company. So if we want to calculate the break-even point in units and in sales dollars, we have to use two formulas, which are number one, break-even point in units. Break-even point in units. To calculate this, we have to write total fixed expense, and we have to divide this total fixed expense by contribution margin per unit. Here our total fixed expense is given 2,16,000 taka. From our question we get this amount, and contribution margin per unit is taka 18, which is given in our book, which we get from deducting 12 from 30. Then if we divide 2,16,000 taka by 18, we will get 12,000 unit, which is the break-even unit. That is, if we sell 12,000 unit, then we will reach at break-even point. Now break-even point in sales. Break-even point in sales. If we want to calculate this, we have to write down at first fixed expense, then contribution margin ratio. Here contribution margin ratio is 18 divided by. Now we also want to know what is how to calculate contribution margin ratio. Contribution margin ratio means contribution margin is how many portion of contribution margin in total of sales. And if we want to calculate contribution margin ratio, then we have to write at first the amount of contribution margin, which is taka 18, and we have to divide by 30. 18 divided by 30. 18 divided by 30 equals to 60%. Then if we want to calculate break-even point in sales, then we have to write here 2,16,000 and contribution margin ratio is 60%, so we can write here 0.6. So we will get taka 3,60,000 3,60,000. We can calculate this amount by using another formula, another way, which is here we get break-even point in unit is 12,000, and our selling price per unit is 30. If we multiply these two, then we will also get the break-even point in sales, which is 3,60,000 taka. That is, if we sells amount of 3,60,000 taka, then we will get the amount of break-even point. We will reach at break-even point. So this is our requirement 1. Now requirement 2. Our requirement 2 is, without resorting to computation, what is the total contribution margin at break-even point? That is, at break-even point, what will be the total amount of contribution margin? So we know that our break-even point is 12,000 units, and contribution margin per unit is taka 18. So our total amount of contribution margin margin at break-even point will be 12,000 into 18 equals to 2,16,000 taka. Okay, so this is our requirement 2. Now in our requirement 3, it is asked how many units the company would have to sold each quarter to earn a target profit of 90,000. That is, if the company has want to achieve target profit 90,000 taka, how many units they have to sold? To calculate this target unit, they have to use a formula which is fixed expense plus target profit divided by contribution margin per unit. So here our fixed expense is 2,16,000 and target profit 90,000 divided by contribution margin taka 18. So our total amount will be 2,16,000 plus 90,000 equals to 3,06,000 divided by 18. Then we will get target unit 17,000. That is, if we sell 17,000 units, then we will achieve 90,000 profit. So this is our requirement 3. And now it is also asked to prepare an income statement to verify that if we sell 17,000 units, we will achieve 90,000 taka profit. So now we have to prepare an income statement for 17,000 units. So at first in our income statement, always it will be sales. So 17,000 into 30 minus variable expense, always we have to deduct from sales, which will be 17,000 into taka 12 variable expense per unit. Then we will get contribution margin, and after that we have to deduct our fixed expense, and then we will get net income. So if we multiply 17,000 into 30, the amount of total sales will be 5,10,000. Then if we multiply 7,000 units by taka 12, which is variable expense per unit, then we will get 3,06,000. After deducting this 3,06,000 from 5,10,000, we will get the amount of contribution margin, which is the amount of variable expense will be 2,04,000, and if we deduct this variable expense from sales, then we will get the amount of contribution margin, which is 3,06,000. And after deducting total fixed expense 2,16,000 from contribution margin, then we will get the amount of net operating income 90,000. So after preparation of income statement, we have seen that if we can sell 17,000 units, then we can achieve 90,000 target profit. Okay, so this is our requirement 3. Now, requirement 4. In our requirement 4, it is said what will be the amount of margin of safety in dollar and percentage terms. Basically, margin of safety means the difference between total sales and break-even sales. Total sales minus break-even sales. So, and the amount of the higher the amount of margin of safety, it means the lower the chance of incurring a loss. Here, the total amount of break-even total sales is 4,50,000 taka, which is given in our problem, and our break-even sales we get 3,60,000 taka from our requirement 1. So now the difference will be 4,50,000 divided by 4,50,000 minus 3,60,000 will be 90,000. This is the amount of break-even. This is the amount of margin of safety in taka. And if we calculate margin of safety in percentage, it will be margin of safety in amount, which is 90,000 taka, and divided by total sales. Divided by total sales, that is the amount is 4,50,000 taka. And you have to multiply that with 100. So as we want to get margin of safety in percentage, and if we divide 90,000 by 4,50,000, we will get 20%. So it means we get margin of safety in percentage 20%. This is our requirement 4. Now requirement 5. In requirement 5, it is said what is the company's contribution margin ratio. What is the company's contribution margin ratio, which we are calculating in our previous requirement. That is contribution margin ratio. If you want to calculate contribution margin ratio, at first we have to write contribution margin per unit, and we have to divide by selling price per unit into 100. So we get here 60% contribution margin ratio. Then it is said if sales increase by 50,000 per quarter and there is no change in fixed expense, how much would you expect quarterly net operating income to increase? That is, here they want to say that if sales increase by 50,000 taka, and there is no change in fixed expense, if it is said, then we can, if we want to calculate how many amount is increased in net operating income, we can use contribution margin ratio to calculate that amount of increased net operating income. Here, contribution margin ratio is 60%, so we can say that net operating income will increase by net operating income will increase by 50,000 into 60%, that means 30,000 taka. So by solving this requirement, we can say that if sales increase by 50,000 taka and there is no change in fixed expense, so in that case our net operating income will be increased by 30,000 taka. So thank you.